Ambuja's beat was absolutely, astounding. Solid set of earnings. And the beat on the top line was by 100 crores. The beat on the profit was by 150 crores. We've got Navin Sahadeo Edelweiss now joining in to make sense of this. Navin, basic question. Is this big beat enough to drive a further re-rating and more money coming to the stock? Or is this now sort of, we're looking at the hindsight, because I don't know if cement offtake is going to be as strong in the coming couple of months and quarters because of this raging pandemic.
That's right. So I think you mentioned it correct, that this result is indeed a very strong number, but the current commentary is clearly weak in terms of volumes, seeing a sequential or a month-on-month sort of a drop. So what we gather from our channel checks is April is at least about 20 to 30% lower versus March, and the exit rate being lower, you are staring, or the industry is staring at a much lower month of May. So no doubt the result is a big beat, but it might lead to some sort of a marginal earning upgrade, but not the stock re-rating or a further significant re-rating. In fact, we have gone ahead and downgraded the stock to a hold purely for this reason, because this is probably the best quarter for this fiscal for Ambuja, which is behind, as you said. And next 2 quarters clearly look weak, first because of COVID, then the monsoons. There is also the fact that bulk of this outperformance, again, in Ambuja, very similar to ACC, has come purely from variable cost, which is very company specific. What you should also understand is globally the fuel prices continue to go very high, and hence the low cost which Ambuja reported is clearly not sustainable. So with this backdrop of a risk of volumes and prices because of demand overhang largely led to COVID, and then the high cost, I clearly think the best quarter is behind, and we have probably sequentially you will see margin compression, and hence we have also downgraded the stock to a hold.
God, that's putting a lot of caution on the table, Navin. But would you have this kind of a caution over the entire sector? Or are there still, some elements like a Dalmia Bharat or anyone, or a Shri that you will like?
So what you should look at it is clearly from a point that these stocks, or most of these stocks, like you said, Shri, already trades at one of its highest multiples that the company used to get in, let's say, around FY 15-16. That was in that period immediately after the new government was elected, and there was a lot of optimism around that. So a stock like Shri already trades at that extremely high or a peak sort of a multiple. In the current context, of course, result for the March quarter is good and likely to be better for other companies, but I wouldn't call it, that is not something which can drive earnings upgrade for the entire pack. So only where valuations are a little comfortable versus their historical trend, that is where we have kept a buy. For the rest, I think we'll be really watching it. Like Ambuja, we have downgraded it, but ACC, because of valuation comfort, we have still kept a hold, a buy. Hey. So that's how we'll put at it.
Okay, Navin, got that. Thanks for the quick take. Longer discussion maybe at a later point, but that's a lot of caution coming in on Ambuja, saying that perhaps the best is behind us, at least with respect to that bumper performance that we've seen from that company in the fourth quarter. Quickly moving on to a corporate conversation now. It's time for a boardroom. Sterlite Tech has posted the fourth quarter numbers. Recovery continues for the company, with this being the third consecutive quarter of double-digit revenue growth. EBITDA margins are up about 40 basis points quarter on quarter.